It's your boy Cincy, aka Mr. Good Vibes, and welcome back to my YouTube channel. Remember, this is the best Forex channel on YouTube, and if you in fact agree with me, please do like, share, and subscribe. Listen, how is your trading out there, fellow traders? The market is bubbling, and we got some exciting news coming your way. Now, listen, man, before I move further, you guys know that there is a lot going on in the market, and like I said before, we have been looking at our algorithm, and our algorithm has been telling us that there's still quite a few upside in this market that we need to watch out for. But before I jump into the charts, and you guys, I just want to remind you that tomorrow we have a very important news coming out, which is the CPI data, and it's going to give the market a clear idea of what we think the Feds will most likely do when it comes to rate cuts. The Feds are already going to be cutting rates, but what the effect of what the Feds are going to be doing would be. So if this CPI data come out pretty good, then there is a chance that the market might be thinking that there is a chance that the Fed's rate cut could help us deviate some of the problems that we might face in the future when it comes to inflation. But if the CPI data is not received properly, then there's a chance that we might still get further inflation in the future, despite the fact that the Fed might be cutting this rate a little bit too fast than we want. So now let's just dive into the chart and see what we're looking at today, and before we move further down. So today we are looking at the US 100. Again, this is my typical indices chart that I use to see what the direction of the market would likely be. I typically use the Nasdaq 100, the US 30, and the SPX 500. So these are the three major indices of the US stock exchange that I use to track the market. Now, lately I've been using the weekly chart, which is something I've been doing it for some time, but I think it's very, very important that you use a larger time frame to do what we call the top-down analysis, which is something I've learned from a few YouTubers around. So top-down analysis is you using pretty much a larger time frame to see what the general picture of the market might be. Then from that point, you deduce what you want from that bigger time frame and go into a smaller time frame. So we typically use daily time frames to look for our signals, but now I'm going to be using the weekly as a bigger time frame to see what the market is doing, and from there we can now dive into the daily. So the first chart I'm going to be looking at today is the Nasdaq 100, which is the one that typically controls the tech companies, and you can see this is the weekly chart, and that's the W that stands for weekly, so which means each and every one of these candles represents the weekly candle. Now again, the same theory applies to this, just like you guys know on how I do my interpretation. The first things I always look at are my primary indicators, which is the green arrow and the B sign. And whenever you see these two indicators, it's telling you that this is a potential direction that the price of the market will go in the upward direction, because the B actually represents buy. The next thing you look for is the baseline, which is this red and green line. So you can see if it's a sell, you would get a red line, and if it's a buy, you would get a green line. So you can see currently we are getting a green line, and also you're seeing that the price, which is the candlesticks, are also trending above the baseline, which is what we want. We want the candlestick to be above the baseline, because that is representing more of a bullish trend. But if the candlestick is trending below the baseline, then that's going to be more of a sell. Another thing I like is the fact that we're looking at our Ichimoku cloud in this case, which is this green fuzzy cloudy color that we see here. The fact that this candlestick is currently below the cloud, and that is good. If you do find the candlestick below the cloud, then that's going to be more of a bearish environment. But if you see the candlestick trending above the cloud, then that's going to be more of a bullish environment. As a matter of fact, you can see that this market has actually been trending for some time now, which is why I think that this bullish market is still very, very strong. Now another thing that I also look at is, once I've confirmed my primary indicators, I want to start looking at my secondary indicators, which are usually below the chart. So if I was to kind of like zoom out a bit and just focus more on the secondary indicators below the chart, the first thing I always look at is my one line cross or my zero line cross. So you can see the white line here is my zero line, and you can see the green line here is my signal line. So you remember, whenever the signal line is above the white line, then that's more of a buy signal. If you see the signal line below the zero line, then that is more of a sell signal. So you can see the current status of the signal line is above the zero line, so that is more of a buy signal. So that's telling me that this is going to be more of a buy signal. The second one is the two-line cross. Again, the two-line cross is a fast line, which is a green line, and a red line, which is a slow line. So you want the green line to be above the red line for you to get a buy signal, and if it's a sell, it will be more of a red above the green. So you can see the current status is the green above the red on the weekly chart. So that is telling me this is a buy. So we have two buy confirmations. Then we also look at this indicator right there. You can see that the color is changing. If you look at the color of the bars, we're going from red bars to more of a light green color. So you can see this is telling me this is more of a buy signal as well. Very, very simple, no more, no less. Then I also like this zero line indicator as well. You can see the purple line and the signal line. And the way this works is if the signal line is between this green dash line, the upper level, and the middle line, then that's more of a buy. But the signal line is between the mid-level zero line and the lower boundary, which is this red dash line, and that's more of a sell. So you can see the current status is actually between the upper and the middle, and that is more of a buy signal. So now we have three buy signals for the US 100, and we're looking at one more. One more is this two-line cross. So one more is this two-line cross. So the two-line cross is looking at two lines: the green line, which is the fast line, and the red line, which is the slow line. So you can see whenever the green line is above the red line, that is a buy, and whenever the red line is above the green line, that is a sell. So you can see the current status is that the green line is above the red, so that is more of a buy signal. So we have 1, 2, 3, 4, 5 different buy signals on the secondary, and we also have confirmation on the primary. So you can see if you combine all these together, that is telling me that there's a potential move that the market could go to the upside. Now, especially with the news coming up tomorrow, like I said, we have the CPI news which is coming out tomorrow, and you can see I'm going to go ahead and filter out my news, and the red colors actually do mean impact news. And for those of you who don't know, you can use Forex.com to find this website for you that are looking for the most recent news that will most likely impact your trade. So you can see the most current currency to focus on is the USD, and the core CPI is going to be 830 tomorrow. So I think this move is going to definitely impact the market, and we also have unemployment claims as well. So these news are definitely going to impact the market. Or how it's going to impact the market, we don't know, but this is what I think is going to happen. So I think if the market receives this news well, you can see today we actually traded all the way to this previous resistance, which we have here, which is this line, and at 20, I believe it's around 20,370. If the news likes it, remember this is the weekly candle, so this represents all the trades we've had all the way from Monday, and Friday is going to be the last day. If the market likes it, we're going to push this candle all the way above this resistance, and if we close above this resistance tomorrow, then there's a chance that we're most likely going to go test this 20,752 level in the next coming days or next coming weeks, which is why I like the market. I did buy some calls. I also bought some indices as well. I'm actually holding some. I sold some today because we actually tested this first resistance. I'm still holding some of them to see if we're going to be testing the second resistance. Again, I'm trying to trade with caution as we are going into this CPI news tomorrow, because there's been a lot of sentiment about October being a very, very dangerous month. But for so far so good, if you look at the chart, that has not been the case. But we still also have to understand that there is still that notion behind our back that the market might still drop in October. So we have to be very careful and be risk adverse. Again, so again, tomorrow, be careful. Make sure you're trading. Make sure you know your risk. You're going to be watching this market closely and making sure that this market does not catch us off guard. Again, this is your boy Cincy, aka Mr. Good Vibes, and let's make some small money together, even if it's just a little.